Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video.
Hello YouTube, good morning, good evening, good night, depending on when you're watching this. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only, and it's my view of the markets. So now that's out of the way, let's take a look at Bitcoin. What's happening? Well, we've been going sideways. We've been going sideways now for, what was this, 19 days. So 20 days, everyone's starting to get bored. All we're seeing within this tiny range is we're seeing people getting liquidated. We're getting a lot of FOMO at the top of the moves, and we're getting a lot of aggressive shorts at the bottom of the range. And that's all it is. It's a sideways range. So you can, once again, draw all your different chart patterns on this and create flags and create diamonds or whatever you want to call it. But at the end of the day, it's a sideways range. So first and foremost, let's take a look at the sideways range and let's see what's been going on. So if you remember from last week, we did have a range fib that we were using, and effectively this was it. And as we can see, we've had respect at the lows with the deviations. We've had respect to the deviations of the highs. We had a swing failure pattern up here, or you could say a failed rally or whatever you want to call it. Either way, the bulls didn't have the strength to continue pushing higher. And then obviously we've got a lot of respect around the EQ. And obviously if we want to take that one step further, we can just throw on a volume profile within this, and we can see what's been going on. Effectively, we have been staying within value quite a lot. And every time we've deviated out of value, we've come back in. And that's all that's happened. So last night, well, through the early hours of this morning, we did come down, we did sweep the lows, we did a swing failure pattern of this low here in the end, which then resulted in a nice bounce. So for me, that was an acceptable scalp long. And what we can see when this did happen, we can see a lot of selling coming in at the lows. We can see down here, a lot of selling at the lows. These the purple bars here. We can see, we've got 1.4 million selling here, 600k, and this is on the inverse chart, by the way, on Bybit. And these volumes are a lot lower at the moment because, well, there's still a lot of people with the funds off exchanges, I'm guessing. But we can see, every time we're coming into these lows, we've got so much selling. And then this last week down, lots of selling, and lo and behold, push price back up in the end. So basically, what you've got to think about when the market is moving in a direction, you've always got to ask yourself, is it doing a good job of moving in that direction? So when you see a lot of market sells, this is people hitting the market sell button, whether that's through a stop loss, which is normally triggered by a market order, or people just market selling, which is obviously the aggressive participants. When you see them heavily selling into a range low and they're not getting continuation, so therefore they're not doing a good job, then you look for a reversal of that trade. And this is what I teach within the group. So for me, this was an acceptable scalp long. Okay, so TP1s are already hit, stops to entry, and if this does continue to roll over, then absolutely fine. And if this does continue up towards the range highs, then great, we're still in a winning trade, and we can take more profits along the way. Okay, bear in mind, obviously, we've got the point of control, we've got the range EQ as the local resistance, and if we do get higher than that, then we're coming back up into the value area high / range high. So we do have some significant resistance above us at the moment. So again, I'm not overly bullish, I'm not overly bearish, I'm just trading this range. When we've been consolidating sideways for such a long time, there's no reason to start taking bets on direction. All you know is when price comes to your range lows, you're looking for longs if you get a suitable reaction, i.e. the people selling into the lows this morning. When you come up to the highs, if you see a lot of people buying but price isn't continuing, then that's a great reason to take a short. So you're just shorting the highs and longing the lows, and this range has been absolutely perfect. The guys in the group have been smashing this, and it's been brilliant to see. Everything that I've taught them so far is just paying off, and the guys are making buck, and I love to see it. I love to see it. So what happens once we do break out this range? Well, we've got to zoom out for that. So what we're going to do is got to zoom out, and let's look at the overall range. So let's come up onto the daily, and we can start looking at the macro range. So you guys know this has been my macro range now for months. We've got the first low, we've got the first major high, and then we've got this whole region here as a deviation. Okay, and you can see from the range fib tool, this is one of the tools that I give out to the private members. We can see we broke out of the range, hit the first deviation perfectly twice. So you had 2 opportunities there to get in, perfect. Came back up, couldn't get back into the range here, and then eventually we did get back into the range. Now we're hovering around here. So why did we stop around here? That's probably one of the good questions. You know, why didn't we continue up towards this range high? Well, quite simply, if we just look with the volume profile on here, we can see that this consolidation here is the last major resistance in terms of volume on the charts. So there's a lot of people with a lot of eyes, and me included, got our eyes on the range highs. Now the only thing we have to consider at these range highs is there is no volume here at all. No volume, it's a volume gap. So when there's a volume gap like this, there's 2 things that can happen. If price does come into it, it will either quickly run through it until the next major resistance, or alternatively, it will move into it quickly and move back out of it quickly. Okay? Either way, there's a higher likelihood of not hanging around in this region. Now, that's not to say that can't happen, because at the end of the day, we're playing a game of probabilities. Okay? That's all trading is, it's probabilities. But the probabilities is we don't stay within this area for very long. Okay? So, again, I'm not saying it will happen that way. It could happen the opposite way, but I'm just telling you from experience, from probabilities and statistics, that that's the likelihood. Right? Okay? So, obviously to the upside, a lot of eyes are on this level. Now, we all know when a lot of eyes are on a level, it'll either get front run or price will blast straight through. So, if we do end up coming up here, and it is a quick move, again, this all comes down to the reaction. If we get a quick move, quick spike up, swing failure pattern, back down, back into the range, you've got a short trigger. So effectively, all this is doing, this move up here, is taking out the stop losses from here, grabbing the liquidity. Okay? So if you see this, back into the range, break structure to the downside on a lower time frame, and then you've got a perfect short trigger. Okay? Now, again, that's not saying that's going to be a short trigger to brand new lows. That's just a short trigger to continue playing the range that we're in. So your first point of contact, if it does come down here from the highs, is you'll be looking at this value area high. We can see here from the top of the coloured area on the volume profile here. So effectively back to the top of this range. Okay? Or the top of this little consolidation here. If it then gets through that, then you'll be looking for lower. Back down towards the EQ, we can see this is where the volume really starts coming in. Okay? Again, we've got another thin area just below us. Right? If it does continue up and goes higher, then first and foremost, I'm going to be looking for these outer deviations. Again, because it's thin, I'll be looking for this to be fairly quick. If it's not, then I'm going to maybe readjust my plans and think about it. If I get a good reaction and a pullback, a straight away break of structure, then I'll look for shorts. And I'll also take some more profits off the longs that I'm still holding. Okay? So I'm hedged. I'm hedged. I am still in swing shorts from much higher. And I am in swing shorts from, as you guys know, because I've said it a few times, down here. Okay? So I'm hedged, so I don't care if price goes this way or it goes that way. I really don't care. Makes no difference to me because I'm a level-to-level trader. Okay? So what happens if we do lose this little range here that we're in right now? Well, first and foremost, I'll be looking down at this EQ and this consolidation below it. So this is a bit of a region for me because there's quite a few things within this region. There's quite a few areas of interest in this region. So this would be your first point to note. If price does break down, do we get a good reaction? Do we get a suitable reaction? Do we get a change in market structure? Do we start coming back up? In that case, you've potentially got a long trigger. Okay? And again, looking back up at this consolidation here, if it can clear that, then once again, looking back up at the range highs. Okay? If you don't get naff all reaction in this area, and price just rolls over, and it just cuts straight through like butter, then be looking back down, first and foremost, at this point of control. Does this point of control offer anything? If not, then the value area low, which is coming in roughly on, again, this is on the Bybit inverse chart, this is coming in roughly 18.6, 18.7. Okay? Again, another region there that I'd be interested in, which is the bottom of all this volume here. lose this level, if that doesn't happen, then I'd just be looking for it to continue rolling over. And I'd be looking initially back down at the original range lows, which is down here, which is coming in at 17.5. If we get a reaction there, look for the change in market structure. If it happens, then you've got a long trigger. Okay? And for me, that'd be a case of potentially adding back into these longs from down here. Okay? If you get bug roll reaction, let it roll over. And then you're coming back into this consolidation here, and we can see the high volume node down here, which is the old point of control of this range. Okay, so we're literally just playing level to level. Lose this, then your bull case is invalidated, and the lows are in. It's as simple as that. And that'll come down. As long as this holds, then your bull case is certainly on the table. Okay, it's an option. But again, I'm not getting overly bullish, I'm not getting overly bearish, I am just trading level to level. Okay, this range could go on for a heck of a long time. Those of you that weren't around in the last bear market, or the bear market before that, then you'll know that, you know, these ranges, they might feel like an eternity, but that you just got to learn to trade them. Because if you don't learn to trade them, then you're just going to be sat on your side, or you're going to be long in every single move, thinking that you're going to get continuation. And that's what we've seen up here. Every time up here, we've seen people longing the highs, longing what people are classing as a breakout, longing it because they're just wanting that continuation, because they're so used to it from the last bull market. When price is literally just going up, you can get away with stuff like this. You can get away with just longing. And just longing. And you get away with it. And they're the bad habits that a bull market creates. But I'm sorry, you've had, you know, since the highs, November 21, you've had all this time to learn how to trade properly. To learn how to trade a ranging environment. Okay? And this is what you need to learn. You need to understand. You need to identify. Once we get out of a ranging environment, then yeah, you can start deploying your degen strategies. Okay? Not something I'd ever condone, because it's not the way I teach and it's not the way I trade, but you know, you might get away with it. You might get away with your bad habits again, but all I can say now is the next bear market that happens after the next bull run, you will just give it all away again, because you never learnt the first time. So learn, use this time. Obviously, if you want to learn along with us, first thing to do is head over to our website, which is spitfiretraders.com. Once you're on our website, come down to our free Discord, which is right here, which for some reason it's taking its time to load up. There you go. Come into our free Discord. You will learn so much in our free Discord. You know, our private members now and again pop in to the free Discord to share a load of alpha with the guys. You know, you can ask questions. No question is too dumb. And I think that's really important. And that's a big thing that we're pushing in our community, is the fact that a lot of wannabe traders will join a Discord and they'll see loads of educational content get thrown out, or loads of charts get posted and setups, and you're scared to ask questions because, you know, you don't want to sound thick. But at the end of the day, we all started somewhere. Okay? I've been in this game now nearly 5 years. And when I first started, I didn't know anything. Okay? Now I teach people my strategies. Okay? So it all comes with time. So no question is too dumb. No question is too dumb. And nobody in our Discord will take the piss out of you for asking any question. As simple or as complex as you want. Okay? So that's the beauty of our community that we've got going on here. It's something that we've nurtured, and something that I'm really proud of our community. Obviously, if you do want to take your learning to the next level, then come over and check out our Co-Pilots course. Okay? From our Co-Pilots course, you will get access to over 80 hours of educational content. Okay? Including everything from absolute beginners to advanced trader. And this is covering everything from trading Bitcoin, trading Forex, stocks. Last night we finished our, well, we didn't finish it. We're 3/4 of the way through our altcoin trading module. And last night I actually shared the best strategy for swing trading altcoins with a very high hit rate and ridiculous outcomes. So obviously if you guys want to watch that, it'll be uploaded onto the website today. And yeah, as I say, it's $59.95. It's not going to break the bank. Okay, for that you get 4 new live streams a month, you get additional bonus live streams that are thrown around news events, you get access to my personal trading plans every single day of the week, and it'll cost you 60 quid. Okay, so worth considering if you really want to learn and you really want to get a grip on this market and understand how to trade it like a professional trader. Okay, so that's it. So recap: range highs, looking for either a swing failure pattern or something fast. If not, then the standard deviations. If not, then you're coming back into this consolidation here. Okay, which should be acted as resistance, we can see from the volume profile here. Okay, drop down here, looking for this area initially. If no reaction, then I'm looking around the point of control or the overall range lows. Okay, they're the key levels that you need to have on your charts. Put them on your chart now. And again, if you want to learn along with us, then come join our free Discord. All right, gang, if you've enjoyed today's content, hit that like button for me, leave a comment down below, and I'll see you next time as you are. Bye-bye.